The coronavirus pandemic has brought about a wide change of botheration to the world as a whole, as it did also to the United States of America. The world seemed to have come to a full and complete stop. Trains stopped traveling, planes stopped flying, buses stopped going from point A to point B. All businesses from Main Street to Wall Street had to shut down. Everyone and everything was impacted. The effects of the coronavirus pandemic. Supply chain shortage. The supply chain bottlenecks around the world have caused massive shortages of any products that American consumers are accustomed to. Needless to say, both consumers and retailers have faced difficulties sourcing almost everything from toilet paper to medical materials to electronics and even human resources. But could it have been avoided? What is a supply chain? A supply chain is an entire system of producing and delivering a product or service from the very beginning stage of sourcing the raw material to the final delivery of the product or service to end users. To simply put, a supply chain is any network of companies that works together to provide a good or service to an end-use market. To illustrate, let's use McDonald's as a case study. McDonald's serves almost 1% of the global population every day. That's an estimated 75,270,000 people buying food from Mickey D's all over the world. The supply chain of this fast food giant includes companies like Tyson Foods, Lopez Foods, 100 Circle Farms, Gavinia Gourmet Coffee, Hildebrandt Farms, and many more. These companies provide bakery supplies, meat, poultry, fish, produce, and dairy products to the giant. So any disruptions to one of its complex web of direct and indirect suppliers will throw a monkey wrench in the entire operation and create massive delays that will impact the global supply chain. And that is exactly what happened during the pandemic. As many of these companies were unable to secure the right goods and services to keep their businesses going, problems started arising. For example, potato farmers in Idaho and Montana got stuck with their merchandise because of government mandates, so they had to throw it all away. As a result, French fry processors had to cut down their orders from growers, and the growers had to cut down their orders from seed farmers. A sack of potato went from costing $12 a sack to $3 a sack. Simply put, there were not enough potatoes to be processed for French fries. In addition to its food network, the company contracts a wide array of trucking companies to deliver its beverages and soft drinks to stores. And during the pandemic, truckers became a rare commodity. The American Trucking Association in 2019 estimated that it would be short some 60,000 drivers, but those shortages drastically increased due to retirements and new truck drivers needing to be trained due to COVID-19 closures. Simply put, during the pandemic, the seasoned truckers that were due to retire took a call on that option, and the newer truckers entering the industry faced a slowdown because of facility closures and understaffing issues. Government offices like the Department of Motor Vehicle, which issues commercial driver's license, were also closed for extended periods of time. All in all, a snowball effect was inadvertently created. But many analysts and commenters seem to be divided on the real reason why these things have happened in our economy. One commenter stated, "The supply chain issues were caused by the government, but not due to Biden. It began with Trump, and Biden has had a problem correcting it. The pandemic obviously impacted manpower needed for the supply chain logistics to work well. It also was a consequence of events. Nobody expected exports to rise because of the pandemic, and in parallel, their normal rise caused by Christmas shopping. The first half year of exports to the US from China rose 27%. It was closely followed up by Christmas demands. China has 3 automated ports that can load much faster than US ports can unload. These ports operate 24/7. American ports operate 16/7. Now that these American ports began operating 24/7, the backlog should go down. But again, China can load much faster than the US can unload, so as long as there is a backlog, logistics will still be delayed. Others on the opposite side of the spectrum saw things differently. One commenter stated, "The real reason is multifold. For the US domestic supply chain, we are still short of labor due to the coronavirus. Labor is at less than optimal in manufacturing, processing, shipping, transport, receiving, and distribution. All of the suppliers I buy from report delays in shipping and delivering the goods I order. Some of my orders are in fact delivered on time, and some are delayed even if the item I ordered is in stock and not back-ordered, not available to the shipper I ordered from. Even hedge fund manager Peter Schiff weighed in on it. In an interview, he stated the following: "We're the mirror image of that now. We're the world's biggest debtor nation. Record trade deficits. We've got no savings. We have a complete bubble economy based on artificially low interest rates, excess consumption financed by debt and money printing, and we're about to pay the piper for that." Whichever side you're on, one thing remains certain: there's plenty of blame to go around.